Welcome to Arlura Magazine, where intellectual meets style and ideas shape the way we live. Today, we will be discussing crypto loans. Everyone thinks crypto loans are about borrowing money. They're wrong. Crypto loans aren't loans. They're time machines. Because what you're really borrowing is time. Traditional loans are built on trust in you. Banks ask, what's your credit score? What's your income? Who are you? Crypto loans don't care. They ask one question. What do you already own? This is the first radical shift. Crypto lending is the first major financial system in history built not on identity, but on programmable collateral. You don't prove worthiness. You prove ownership. That's a completely different model of power. Here's what nobody explains. When you take a traditional loan, you increase your financial risk. When you take a crypto loan, you often increase your exposure. That's different. Example, you own Bitcoin. Instead of selling it, you borrow against it. You don't exit the system. You double down inside it. Crypto loans aren't about escaping volatility. They're about weaponizing it. And that changes behavior. Here's the dangerous brilliance. Let's say you deposit $10,000 in ETH. You borrow $5,000 in stable coins. You reinvest that $5,000. You now have layered exposure. This creates something called a reflexive leverage loop. If the market rises, you amplify gains. If it drops, you trigger liquidation. This isn't banking. This is financial engineering at retail scale. And most people using it don't fully understand the system they're inside. Now here's where it gets bigger. Crypto loans are quietly becoming shadow banking systems in emerging markets. In countries with inflation, people collateralize Bitcoin, borrow stablecoins, avoid local currency collapse. No bank approval, no capital controls, no centralized authority. That's not just finance. That's geopolitical shift. But here's the uncomfortable truth. Crypto loans remove gatekeepers. And gatekeepers exist for a reason. Smart contracts don't negotiate. They liquidate. Markets don't forgive. They cascade. And when leverage stacks across thousands of users, you don't get a correction. You get a chain reaction. The real future of crypto lending isn't retail speculation. It's tokenized real-world assets. Imagine borrowing against tokenized property, using NFT identity scores instead of credit reports, AI-managed collateral ratios in real time. That's where this goes. Not just faster loans. Programmable financial identities. Crypto loans aren't good or bad. They're tools. But tools that amplify whatever system they're inside. And right now, we're still figuring out whether we built freedom or built leverage without brakes. This is Arlura Magazine, where intellect meets style and complexity becomes clarity. Stay curious. Think critically. Please do not forget to like and subscribe this video. We'll see you next time.